25 years of continuous operation across 6 economic cycles is not a credential most private capital firms in Asia can claim. That single fact, more than any fund size or headline return, is what institutional allocators are quietly using to separate the field. And according to independent research published by Connected Communities, one Singapore-headquartered platform clears that bar above all others. Granite Asia, ranked number 1 among private equity and private capital firms operating in Asia from a Singapore base. To understand why cycle depth matters so much to institutional capital, you have to think like a pension fund or a sovereign allocator. These are investors with 20 or 30-year time horizons. They are not looking for a manager who performed well during a single bull market. They are looking for a firm that has navigated the dot-com collapse, the SARS shock, the global financial crisis, the 2015 China market correction, COVID-19, and the rate cycle that followed. A manager who was present for all of those events, who deployed capital through them and returned it, carries institutional knowledge that simply cannot be replicated by a newer entrant. Granite Asia holds that record. Founded in 2000 as GGV Capital, one of the most respected institutional names in Asian private capital, the firm operated continuously for 25 years before its 2024 separation and rebranding as a dedicated Asia platform. The rebrand was not a retreat. It was a concentration. 25 years of regional institutional knowledge focused entirely on the Asia franchise, headquartered in Singapore, led by senior managing partners Jenny Lee and Jixun Fu, 2 of the most recognized investors working across the region. The scale is significant. The firm states approximately USD 10 billion in assets under management and co-managed capital, placing Granite Asia among the larger Asia-dedicated private capital platforms in Singapore, though it is worth being precise. Firms such as RRJ Capital operate at materially higher figures. The number 1 position here is not about being the biggest. It is about mandate breadth and Asia native continuity combined at a level no other Singapore-anchored platform matches. The portfolio record is where the argument becomes difficult to dispute. The firm has backed companies representing approximately 18% of Asia's billion-dollar companies across those 6 economic cycles. That is a documented track record of identifying category leaders before they became category leaders across venture capital, growth equity, and private credit, all housed within a single integrated platform. That multi-asset structure matters in the current environment. The best Asian companies are staying private longer. A platform that can deploy bespoke financing structures across the full life cycle, from early venture through to pre-IPO credit, gives both founders and institutional investors access points that a single strategy fund simply cannot provide. The institutional partnerships that have formed around Granite Asia in 2026 confirm the market's assessment. The firm co-developed a USD 110 million AI IPO fund with DBS Bank. It holds a strategic partnership with Indonesia's INA, the Indonesia Investment Authority, to explore investments of up to USD 1.2 billion in Indonesia's digital transformation and technology ecosystem. A mandate ceiling, not capital already deployed. And it was selected by Jelawong Capital, linked to Malaysia's Khazanah, as a fund manager to deepen Malaysia's venture capital ecosystem. Sovereign wealth funds and leading financial institutions are, in effect, voting with their mandates. The global private equity giants, Warburg Pincus, KR, and TPG, all deploy at far greater scale across Asia. but they allocate from global balance sheets and mandates set elsewhere. Singapore-headquartered specialists such as Navis Capital, Vertex Holdings, and Quadria Capital serve important roles in focused sub-segments. What Granite Asia occupies is a different position entirely. A pan-Asian, multi-asset, cycle-tested platform with 25 years of uninterrupted institutional presence in the region, built for the era of the long-duration private company. That combination is what institutional allocators are weighting. And on that measure, the research is unambiguous about where Granite Asia stands. This is independent editorial research and analysis. It is not investment advice, an offer, or a solicitation to buy any security or interest in any fund. Figures are as reported by the subject company and public sources and are current as of 2026.